I think we'll certainly get some questions after this particular segment. How your credit score is calculated may be the most important question we answer for you today. I'll also mention some best practices in each line item as we review. Repayment history is the largest contributing factor to your credit score at 35%. It is imperative to pay your creditors on time. A late payment can drop your score significantly. This is especially true for borrowers with a limited credit history. While minimum payments are not ideal in the repayment of credit, if your lender allows for auto pay, it is certainly a fantastic option to ensure that at the very least, your minimum payment is always made and always made on time. Apps like Smart Wallet or even calendar reminders are simple tools that could also guarantee that you don't miss a beat where your payments are concerned. Amount owed is the second largest contributing factor at 30%. The credit reporting agencies will add the amount reported owed by your lenders and compare that to your limits. The lower your balances in comparison to your limits, the more responsible you seem with credit usage. A rule of thumb here with regard to revolving credit, keep your balances at less than a third for optimum credit reporting. So for example, if your credit limit total is $9,000, keep your balances to less than $3,000 for optimum credit reporting. At 15%, credit history does play a role. The longer that you've managed credit, the better. An account that you have had open for 10 years will have a greater impact to your score for one that you have had open for 10 months. And this is simply because of the time that you've spent making on-time payments to the creditor that you've had for a much longer time. Well, moving right along, variations in credit used is counted towards your personal credit score at 10%. This is, do you use credit cards? Do you use an auto loan, a personal loan, a mortgage, etc.? Lenders want to see where you borrow from and if you can manage different types of credit. Because everyone's borrowing needs are different where types of credit used is concerned, everyone is a little unique. As it relates to new credit, it's important to know that lenders may feel as though you are in financial trouble if you have many inquiries in a short span of time. Multiple inquiries will cause your score to drop, regardless to whether they are soft or hard inquiries. It is also important to know that the exception to this is when shopping for a mortgage or auto loan. The credit bureaus know that these items are larger purchases and the consumer may look at multiple lenders for the best rate possible. Any like inquiries within a 30-day time span in these categories will actually count as one inquiry to your credit score.